Greetings, everybody. This is Christopher Ecclestone here from Hall and Company, and I'm with Sheldon Bennett of DMG Blockchain, who is going to tell us about how he is uh, advancing in the blockchain space, in data centers, and in AI. So Sheldon, you'd like to give us a brief rundown of how the business works, how it's progressing?
Sure. Thank you so much for having me. Yeah, so just to give you a quick rundown and give viewers a quick rundown. For those that have invested in blockchain companies, so these are the crypto mining companies or crypto companies in general, Bitcoin, Ethereum, Solana, other chains out there. You've seen sort of this up and down. It's a very volatile business. Crypto is a very volatile asset in many different ways. DMG, we are one of the first companies. We're actually the first Bitcoin miner to be listed in Canada. Hive, our friends were listed before us, but not solely on Bitcoin. So we always enjoy our Vancouver friends at Hive. But we're coming up now as a company 10 years anniversary, and as time goes by, so does the focus of our company. The last 8 years or so have been very strongly on Bitcoin mining. We also have software on Bitcoin, a Bitcoin mining pool, and we own a trust company for digital assets in Alberta, Canada, called Systemic Trust. So we're heavily ingrained in the world of digital assets and Bitcoin mining. That being said, however, the markets have changed a lot, and there's a lot of interest in AI. Most people are now using or are very much aware of GPT, Grok, Anthropic, and many other sort of AI tools out there, whether you're using it personally or in your business. And that explosion, we're not unaware of. When you look at what we do, which is fundamentally we take power and we put it into servers. That's really what a Bitcoin miner does. And out of that power into servers, we get Bitcoin. That's how we get paid for it. When you look at AI, it's the same idea. You put powers into servers, just a different type, GPUs, and instead of getting Bitcoin out, you would get paid in fiat currency. We would have a service agreement with a a client like the Metas and the AWSs and the Oracles and whoever's out there that is purchasing GPU compute for their LLM, their large language module. And so when we look at our business and the volatility of crypto, the margins have really eroded over the last few years. And we've had our ups and downs, and the ups have been great. The downs have been tough, but that's because we're in a volatile industry that's not persuasive around the world in its reach. Whereas when you
How do
look,
you think the market sees you of these three strands of your business at the moment? Do they see you as
well,
being all three, or do they see one being dominant?
right now, the market sees us as dominant in Bitcoin, in crypto. Um,
Okay.
we see ourselves as evolving our primary asset, which is a Bitcoin mine, into a primary asset, which is an AI inference center. And so we need to make that change both physically, but also to the market and our existing and potential shareholders.
Might a name change be involved?
We also have a company, and we haven't really marketed it yet, called DMG Infrastructure.
Yeah.
And so DMG Infrastructure, there's actually a website called dmginfrastructure.com out there. We will spend more time in 2026 talking about DMG Infrastructure versus DMG Blockchain. And we will be moving our AI data assets and projects into DMG Infrastructure from DMG Blockchain. So blockchain specific assets and business will stay in DMG Blockchain. AI data center specific assets and operations will be in DMG Infrastructure. So there will be that change happening in 2026, and that should help the market. Now, the overall question is, our stock is DMGI. digital mint. DMG actually means digital mint group. That's what the DMG means.
All
Um,
right.
when we
I was
went
wondering.
public, our bankers said, well, you can't be digital mint group because blockchain's hot. You got to put the word blockchain in. And we couldn't figure out how to put blockchain in. So we just hyphenated it down to DMG and added blockchain to it. And that's how we became DMG Blockchain Solutions. Um, and so, yes, there's been discussion of should we just take the blockchain out and be more general. We've kind of gone down the road of, well, let's just add on DMG infrastructure, have two different companies to do different things. And the parent code to unwind it's really hard. To change the parent code name, we can, but right now our solution was to really focus on DMG infrastructure in 2026.
So you're primarily focused on the Canadian market, almost exclusively.
Yes. Yes.
So how do you see the growth rates in Canada versus the US? Is Canada slightly behind, so growing faster, or how is it
So I think
distributed?
I agree with you. The growth rate when we're talking about data centers in Canada and the US are not equal. In the US, it moves faster, it has more megawatts, it has more customers, it has all of those things. The difference for Canada is some things are better for data centers in Canada. Our climate is better. I mean, it's cooler, which is great as a cost of operations. What's great about Canada is we have a lot of fiber, we have a lot of infrastructure, we have a highly educated workforce. We're used to having large resources in small towns that work well. These are all great things that work for data centers because you're not going to be putting 100 megawatt AI data centers downtown Vancouver or Toronto. They're going to be out somewhere in the suburbs of that area. So those are all great things. We have robust capital markets in Canada as well. So that's a great thing too. Americans you know, by far leading that. What's different though, when we look at the U.S. and Canada, is the politics, and there's a new sort of political change in data and data sovereignty, and you're going to hear more and more countries talking about data sovereignty, and more countries trying to figure out how do I build world-class data centers in my country that hold my data for my citizens and my government authorities, my defense, my whatever it may be, instead of it all migrating through fiber lines to US data centers. I think you're going to see that playing out multiple years, and I think you're going to see this idea that we won't be centralizing, talking from other countries, all of their data into the US, which is traditionally what's been happening. We're going to start decentralizing it out, i.e., we're going to centralize a lot of our data in our own country, and we'll still use US data centers. Still going to use Microsoft Teams, and we're still going to use Google, and we're going to still use all of this stuff. But I think a segment, and a growing segment, is going to be what can we do in our own country, in our own borders, and how do we put that economic growth not 100% into US growth, but into our country's growth as well. And will play out well
It's,
for DMG in Canada.
yeah, so then we need to consider where listings are. And have you thought of you have a QB listing in the US? How's that going? And do you need more than that, or in fact, would that work against your interests if you were perceived to be, too oriented to the US when you are essentially going to be targeting being a bulwark of Canadian independence in data centers?
I think that, if I just looked at it from a government sovereign AI point of view from the Canadian government, they would like to see me as a TSX listed company with all Canadian employees doing everything in Canada. I don't think they would frown upon operations in other countries as long as my tax jurisdiction remained Canadian. So at the end of the day, I'm repatriating all the profits from another country into Canada and paying our CRA. And I think they see it the same way if you're a foreign company in Canada. Is what they see is, at the end of the day, a U.S. data center that has bought a data center in Canada, it'll pay its taxes on wages and a few taxes here and there and its property taxes, but the bulk of those profits normally end back to the IRS in the US. And so I think that's really what the sovereignty comes about when you start talking about what do governments look at. Governments care about taxation, they care about jobs, they care about the living standard of their country and where they're going for economic development. And when you think about economic development from a government point of view, the bulk of that is taxation. They need the taxes to develop the country.
Yeah.
So when you start thinking about this from our stock, yes, they would love us to stay in Canada. Yes, they'd like us to be a Canadian tax resident forever. But I don't think that precludes us from doing business outside of Canada, as long as we're not leaving Canada, becoming a tax-paying citizen and stopping being a fundamental tax citizen of Canada.
Of course, you've got an advantage of an educated workforce. You've got an advantage of sophisticated capital markets in Canada. But what about the energy factor? What is the USP that Canada brings you on the energy front? Because as we all know, data centers and AI are voracious demanders of
Yeah,
energy.
I think it's a great question, and I think the US are grappling with this as well. So Canada, we've been great at energy from the point of view that when you look at major projects, you look at aluminum, you look at mining and metals, you look at pulp and paper. These are like bedrock Canadian industries that take a lot of power. And so we have these huge power resource areas, um, around natural resources that we've built up over generations. The US is very similar, just a larger scale, obviously. With data centers coming in, however, what we're finding is that the amount of power they want is something that we're not used to. And if you kind of look back the last 10 or 15 years at investment in power generating assets and power infrastructure, it's only been a few percent a year. But now, with this fundamental change in power consumption for AI and data centers that nobody was really expecting to blow up like it has, the past investment amounts are not enough for today and the future, understanding where the market's going and the need of power. So Canada needs more power. It needs to create more generation. When you look at creating generation of power in Canada, we look at hydro, we look at renewables, we look at wind, we look at solar. Those are the things we want to do. Although Alberta has lots of gas, and Alberta's happy to use their gas. Some companies are fine with it, but when you look at some of the top tier blue chip companies in the world, they have policies to try and use renewable energy as much as possible. So we have this issue where in Canada, to find renewable energy for large AI data centers is hard. US is the same thing. I think there's less renewables there in general. I could be wrong as a percentage, since I don't operate there. But their issue is going to be, can they get enough power that's clean from a user's point of view, so from a corporate point of view, or is their power going to continue being a heavy mix of coal, hydro, and natural gas? I think in the short term, you're going to see a lot more power, and the Trump administration is open about this using, fossil fuels. And I'm not here to say it's good or bad. All I'm saying is that when you look at some of the biggest companies in the world that want to build these data centers and operate them, they do care what their power generation source is. Can you find enough power in the U.S.? You can. Can you find the right mix of that power? That's the question. That's more open. In Canada, it's more push towards renewable energy that came from our government with the Trudeau leading that with the carbon tax has really pushed that. Will there be data centers running on natural gas? Yes, there will be. Will there be a push to have them more on renewable energy? For sure, there will be. If you have renewable energy and you can do 100 megawatts, will you get a tenant that wants to do AI there? It would be hard not to see that happening.
Do you see, in summing everything up here, that the original blockchain business, the crypto business, basically, is sort of a bit of a legacy business that might actually be monetized in some way, as you quite clearly are morphing into a focus on the data centers and AI? Linked as they are back to the crypto, are they divisible? Are they demergeable? Um,
I
Care to
think
comment on that?
I think they can co-locate. I think they can live together. And what I mean by that is doesn't mean they live together in the same data center, which actually is possible. But
Yeah,
when you look at the laws and regulations that Trump has pushed since he's become president in the US, he's very pro crypto. So that's only going to push crypto ahead as a financial product in
yeah,
many different ways. So I don't think crypto is going away. But I think what I'm saying is that, you know, our crypto business will continue, but it won't be highlighted as much as what we're doing in AI, because right now, AI we see as having better returns for our invested capital over a
yeah,
longer period of time and less volatile returns. There'll be more
yeah,
stable. Crypto has got great returns. The ROI is quick. But it's very volatile. It has to be well managed. You have to be
yeah,
very careful in your capital expenditures and how you do them and when you do them.
yeah.
And it's a tough business, crypto, but it can
Mm.
be a very lucrative business if you take a long-term approach on it and you really understand how this asset works.
What is your market cap now, and what was the peak market cap? Have you
Our market
ridden
cap now
the
is
dragon of crypto in the golden era, I suppose, of that element?
Yeah, our market cap now is somewhere around 50 million. I
Yeah.
think we peaked out at 500 million, would have been a
Wow.
bit of our highest. We were used to at one point be a $5 stock, so
Yeah.
it's kind of gone up and down.
Yeah.
And that volatility is really moved with the movement of Bitcoin pricing and Bitcoin regulation.
Yeah.
And part of our goal getting into the AI data center business is to decouple ourselves from just sort of moving with Bitcoin and what's going on with Bitcoin. So if we have
Yeah.
revenue and assets that are decoupled from Bitcoin, we should start having our stock, following a better, a path that is less volatile.
Great. Well, thank you, Sheldon, for walking us through the story. Sounds like you're coupled yourself to the AI and data center train now, and hopefully that will take you onwards and upwards.
Yeah. Thank you so much, Chris.